Around 12,000 years ago, the advent of agriculture marked the inception of human civilization as we recognize it today. Despite the changes that have occurred in our world since then, our requirement for agricultural products has endured. In contemporary times, we find ourselves equipped with sophisticated financial markets. This prompts the question, how does the realm of modern finance intersect with the sphere of agriculture? Learn about agricultural commodities and gain insights into how investors navigate this asset class in this episode. Welcome to the Commodity Exchange, a podcast where we bring you insights from the world of commodities. Whether you are an investor or just want to learn more about the asset class or the topic, this podcast is for you. I'm Mobeen, Director, Macroeconomic Research and Tactical Solutions at WisdomTree. Before we begin, I do need to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. So with me is Aneeka Gupta, Director of Macroeconomic Research at WisdomTree. Aneeka, welcome to the show.
Glad to be here, Mobeen. Thank you so much for the opportunity.
Well, for those people in our audience who tune into Bloomberg and CNBC, they have probably seen you talking about all sorts of macro topics many times already. But Aneeka, why don't you tell us and our audience a little bit about your background in the industry and how you have come to cover a wide range of macro topics, including commodities?
Sure. Thank you so much, Mobeen. I started out in the financial industry back in 2005. I had graduated from University of Oxford with a degree in mathematics, and I just took the first job I got. And the reason why I chose a job in finance was one of my courses in Oxford in financial mathematics really triggered my interest in the financial markets. And so I just took the first job I got, which was at Bear Stearns, and many of us remember, the well-known demise of Bear Stearns. So that was my first introduction into the financial world. It was on the equity side, trading structured equity products, and that really piqued my interest. I enjoyed it. I loved the exposure, and it was an interesting time to be in financial markets. And fast forward, 17 years later, I've had the privilege of working at WisdomTree, where we have an amalgamation of a number of asset classes within, from all the way from commodities to equities and fixed income. And I think the intermingling of all of these assets really interests me, as they have big implications on markets. And one event at one end of the world has, triggers a butterfly effect across the rest of the world, and I keep wanting to be ahead of that.
That's excellent, and I know you are very well versed in drawing those connections and talking about lots of different asset classes. But today we've picked agricultural commodities, so let's dive right into that topic and maybe start from the beginning. Keen to get your thoughts on the reasons why you think people actually invest in agricultural commodities as an asset class.
Yeah, sure. Traditionally, agricultural commodities were accessed by institutional or accredited investors, and they would use it either to hedge their existing portfolios or make investments based on the opportunities presented in markets. But I think today every single investor, be it who has a brokerage account, can access agricultural future prices via exposure to ETFs like we provide, and even access the futures market. Now, in terms of the second part of your question as to why would somebody be looking at agricultural commodities, well, first and foremost, agricultural commodities as a subsector within commodities has a much lower correlation to other asset classes, be it stocks or bonds. So adding an exposure to agricultural commodities, allows that diversification benefit within your portfolio. Now, today we are facing an environment where you have extreme unknown weather events taking place. We also have the unknown risks of wars being triggered. We are currently, living through and in the midst of a very important war taking place between Russia and Ukraine. And it has large scale implications for agricultural commodities. So I think investors are slowly realizing that having an allocation to agricultural commodities is quite important. And that is one of the primary reasons they're beginning to allocate to this subsector. I also wanted to add agricultural commodities also tend to have a much lower correlation to the other subsectors within agricultural commodities. So be it precious metals and industrial metals that follow a much different cycle and path.
Great. So we're talking about agriculture, and I know many people may have heard terms like El Nino and La Nina, and whether this may be in the context of agriculture or climate change or something else. It's very interesting to note what those terms mean and why they matter to the world of agriculture. So, tell us a little bit about those terms, El Nino and La Nina, what they actually mean, and why they matter to someone who is researching agricultural commodities.
Absolutely. El Nino is front and center in 2023. It's definitely coming up on a lot of investors' radars. Scientists are facing maps that are, gleaming red colors because of the warming of the, of the globe. And I think to try and understand what El Nino actually means, I think it's important to take into account when we think of warm weather, we often focus on air temperature, but most of the planet's heat is actually stored in its oceans. So it's no coincidence that right now, when we are expecting an El Nino, ocean temperatures are at the hottest they have ever been on record. El Nino is a name that's given to a weather pattern that takes place that causes the planet to heat up. And it's a natural phenomenon that comes around in cycles every 2 to 7 years. The one that's currently being predicted is for 2023 is coming around after 7 years. And it's also coming up on the back of 3 consecutive years of a La Nina cycle, which tends to cool the planet. Now, scientists have officially declared that we are in an El Nino phase when the sea surface temperatures in the eastern Pacific rise 0.5% above the long-term average. And this was declared in June of 2023. Now, during an El Nino, what tends to happen is the sea winds, which normally blow from the east to the west across the Pacific Ocean, now switch directions. And that means that they are pushing the warm surface water eastward. So it's going from Australia all the way to South America. So the unusually warm water in that region now is releasing heat in the atmosphere, which is essentially creating wetter and warmer air. So that essentially is pushing up the temperature and higher temperatures worldwide, and that's causing extreme weather events. So what you tend to see is, parts of South America get a lot more wetter, so they tend to see warmer yet more heavy rainfall. Yet on the other side of the planet, on the other side of the sphere, you've got parts of Asia which are likely to face drought and extreme heat. As we move into the year. And that's essentially what the El Nino is. And, you know, the fact that we already have seen uh, considerable amount of heat, considerable amount of extreme temperature weather conditions this year, there's a strong likelihood of El Nino progressing and intensifying as we move into, the second half of 2024.
And is it fair to say that agricultural commodities like predictable, steady weather, and whenever there are disruptions to that steady weather pattern, like an El Nino or a La Nina, a deviation from regular weather patterns, agricultural commodities don't like that because that disrupts what sort of weather, the ideal weather conditions they get? Is that the impact on the world of agriculture from these weather
Absolutely.
patterns?
Absolutely. So the first impact you do see from these extreme weather events are felt across the agricultural commodity complex. Um, it benefits some agricultural commodities crop supply, while at the same time it harms the crop supply for certain commodities. So at present, we've seen two very important commodities face some strong implications. We've seen rice. India has actually curtailed its exports of rice, of a certain grade of non-basmati rice in 2023. And this comes on the back of, concerns of El Nino heating up and drying up certain parts of Asia. That's led to an impact where you've seen much higher rice prices in Thailand, which is a very important, grower of rice. Whereas at the same time, if you look at the other end of the globe, you're seeing, crops such as soybean actually have a much more favorable a crop outlook based on the fact that parts of Latin America are likely to have much more favorable climatic conditions. So they're likely to see a lot more rain, which is going to benefit the crop outlook for soybean. So there are certain commodities that tend to have a more price positive environment in this scenario, and certain commodities that have a more price negative environment. And all of it really depends on the intensity of the current cycle, be it El Nino or La Nina, in that particular year.
I want to now touch on something you mentioned earlier when you said low correlations with other sectors or other asset classes, and explore that point a little bit further. I know that whenever there is an outbreak of, say, swine flu in China, the price of lean hogs tends to shoot up, or lean hogs futures shoots up. And that's because China is a large consumer of pork products. And whenever the domestic supply is infected, there is a greater need to import. And of course, that pushes prices up. But I mentioned that as an example, partly because it is fun to mention lean hogs, no matter what the context, but also to illustrate the fact that agricultural commodities are an idiosyncratic bunch. So, just elaborate on that point about low correlations and tell us how the different sectors within agricultural commodities have their own unique characteristics and how they differ from each other.
Absolutely. So, within agricultural commodities, we divide them into three subsectors. So, the first and foremost would be grains. That would include wheat, corn, and soybeans. The second subsector would be soft commodities. So that would include cocoa, coffee, cotton, and cocoa, cotton, coffee, and soybean oil. The third very important subsector, as you mentioned, one of them would be livestock, and that would include lean hogs, live cattle, and feeder cattle. Now, all of these three subsectors are very different. So when you think of grains, you've got to think of the staples, and in that account, their demand tends to be more inelastic. So, despite the fact that you see grains prices rising extremely high, growing populations still need to be fed. And as these populations increase, and as we see the global population actually increase, you just need more and more greens to to satisfy this growing population. Now, in terms of soft commodities, which include cotton, cocoa, coffee, there you could see demand and supply actually be substituted or even curtailed in times when those particular commodity prices are very high. And in the case of livestock, they do follow a very seasonal pattern. So it really depends on not only the climate, but also the rearing and the breeding of those current animals at that point in time. And like you mentioned, if you have an outlier, an unknown event, where a particular, a disease has been, certain livestock has actually been infected with a disease, that's just a whole new ball game where you could have an extremely price positive environment.
Anika, in investing in general, we talk about this idea of cyclicality, be it in the context of economics or markets, and we refer to some agricultural sectors as being cyclical as well. Tell us a little bit about the cyclicality in agricultural commodities and how it differs from the cyclicality in other commodity sectors like industrial metals and energy.
Absolutely. So, what we've seen in agricultural commodities, and also based on, the previous categorization of agricultural commodities into three subsectors, uh, there is each subsector has its own unique characteristics, and in that account, when you do have, shortage of supply in certain grains, we still see those prices. We see a immediate price impact where prices tend to go higher. But the demand for those agricultural commodities, given the fact that they're staples, they tend to be largely inelastic. And hence we see, a much stronger and a much more robust demand for those particular commodities. Now, if you compare that in parallel to industrial metals, that's another commodity subsector. Industrial metals are so closely tied with the economic cycle. So you know if you're seeing concerns of rising recession, that tends to impact sentiment towards the demand side of the equation for industrial metals. But that's not the case within agricultural commodities, especially within the first subsector, which is grains, which tends to be relatively price inelastic. Now, in the case of soft commodities, when you look at cocoa, coffee, sugar, um, in those particular commodities, they're more cyclical in nature, I would say. So if you see the price of coffee rise to an extreme level, you do tend to see some curtailing of demand, or you do tend to see some substitution from Arabica to Robusta. So other substitutes within the soft commodity subsector will take place. If you see, if you see oil prices actually coming down, synthetic fibers become more price competitive, and hence, investors would substitute cotton fabrics for synthetic fabrics, and vice versa. And that's how we would. That is precisely why you tend to see that low correlation between agricultural commodities in comparison to industrial metals or precious metals as a subsector within the commodities complex, and that's what makes it interesting. That being said, the fact that agricultural commodities are so strongly correlated with weather patterns also makes them very volatile. And I think that's one factor that investors seem to look at as a big challenge towards investing in agricultural commodities. But at the same time, that volatility also presents an opportunity for investors, similar to what we're seeing this year. The extreme weather events that have taken place have been opportunities for certain agricultural commodities. We've seen cocoa actually perform extremely strongly this year on the back of these rising temperatures in the African region. We've seen, most cotton also start to benefit. We've seen wheat caught between the geopolitics of the Russia-Ukraine war. So a number of these commodities have benefited from that added volatility, which is why we believe that instead of looking at it as a challenge or a hindrance, you must also look at it from an opportunistic standpoint.
I know you've mentioned the Russia-Ukraine war a couple of times. Let's explore that a little bit further. I think the audience would be very keen to understand really how and why agricultural commodities have been particularly affected from that war, and which commodities, I know you've mentioned some of them, but which commodities have been particularly affected from the conflict. So why don't you elaborate on that a little bit further?
Absolutely. So, if you just rewind a little bit more than a year back, we were all caught by surprise when the Russia-Ukraine war took place. And as we all know, Russia and Ukraine are very well known to be the breadbasket of Europe. But in addition, Russia and Ukraine are also home to nearly 30% of supply of global grains trade. So that includes wheat and corn. Now, in the aftermath of the war, we saw agricultural commodities rise, to rise to quite a strong extent, as it was an extremely price positive environment. Now, part of that was because of the fact that Russia and Ukraine account for such a large amount of supply of these particular agricultural commodities, such as corn and wheat, in addition to very well known oil seeds, which also triggered a knock on effect on palm oil and soybean oil. But in addition to that, fertilizers, so well known fertilizers such as nitrogen, DAP, potash, they're all supplied by Russia and Ukraine as well. And the fact that the war took place, it actually impacted the prices of these fertilizers to a major extent. And let's not forget, a major input for nitrogen as a fertilizer is natural gas. So when prices of gas rose in the aftermath of the war, that also triggered a knock-on effect for these particular fertilizers. So the intermingling of higher fertilizer prices, the shortage of supply on account of the war, really resulted in a very tight supply situation, which is why we saw prices escalate at such a fast pace. But shortly after that, what did transpire is the Russia-Ukraine Black Sea Grain Initiative, and that essentially allowed the safe transportation of grains supplied from Russia and Ukraine. That deal was overlooked by the United Nations, and that essentially allowed these grains to be facilitated out of the Black Sea, to be exported to the rest of the region. Now that helped alleviate some of the price pressure, and that's why even though we saw this sudden spike in prices, shortly after we did see some abatement in that extreme high price environment. But if you fast forward to today, the war has not been resolved. If anything, we are now seeing a further escalation of tensions. Now, 3 weeks prior to the extension of the Black Sea grain deal, we had actually predicted that Russia would withdraw from the Black Sea grain deal, because two of the very important prerequisites that Russia had put in place was they wanted their agricultural bank to be reunited back to the SWIFT system, and the second very important criterion was that the ammonia pipeline would be brought back online. Now, neither of these two conditions was satisfied, and we knew that if they were not, there was a higher chance and a higher probability of Russia withdrawing, which is why we sent out that message to our investors. Now, clearly, in the last few weeks, if anything, these tensions are only escalating. And, we believe uh, Russia was actually trying to find its own path of exporting its grains, which is, they've had a record wheat harvest. They were finding their own ways, carving out their own ways of exporting these their grains, which are plentiful, and actually cutting Ukraine out of the market. So, we recently saw them sign deals with parts of Africa, parts of the Middle East to actually release their grains out of the market. But what they're trying to do is they're inhibiting Ukraine from doing so. And just this last week, we've also seen Ukraine retaliate. So, if anything, the situation is very, very unclear and is breeding a lot of uncertainty in the market. And owing to which, we do have the two most important grains, wheat and corn, being caught in the geopolitics of this war that is taking place, and hence that does create a more price positive environment for these two commodities, unfortunately.
Let's talk a little bit about the intersection of agricultural commodities with the world of energy. We mostly think about agricultural commodities as things we need for food, but of course the sector has applications in the world of energy as well, particularly some agricultural commodities. Tell us a little bit more about that.
Absolutely. So, what has been happening is that when the price of oil tends to rise, what we tend to see as a response from several governments is they begin to increase uh, um, the amount of uh, you know more cleaner fuels such as ethanol and biofuels that should be added to gasoline and oil that is used to fuel our cars. So typically, when we see oil prices rise, that tends to lead to ethanol, which is currently the chief liquid biofuel, also increasing in price. Now, its main producers of ethanol are the US and Brazil. Now, clearly, the US accounts for nearly 58% of ethanol production, while Brazil accounts for 27%. But this really has an important impact on two very important agricultural commodities. In the case of the US, ethanol in the US is generally produced from corn, and hence, when the price of oil rises, the demand for ethanol rises in lockstep. As the mix of oil is to ethanol is favored to adding more ethanol, and hence that just leads to higher demand for corn. Now, in Brazil, it's quite different because Brazilian ethanol is used from sugarcane. So, in Brazil, when you see the price of ethanol rising in lockstep, you tend to see the price of sugar actually increasing because plants, the actual underlying sugarcane producers will decide for that particular year what mix of sugarcane will actually be used for producing sugar as opposed to being allocated towards production of ethanol. So it does have very important implications, between and you see this important knock-on effect between energy markets being felt across agricultural commodities as well, particularly for sugar and corn. And in addition, another very important aspect of the correlation between the two is when we see higher energy prices, that makes synthetic fibers, which essentially use petroleum as an important input, quite expensive. And hence, investors essentially substitute between synthetic fibers and cotton fibers. And so you see the demand for cotton actually increase in that over that period of time, as investors substitute synthetic for cotton fibers. And then obviously, one of the places where which we witnessed last year, and had a very strong impact was higher gas prices, and clearly because nitrogen, a major input for production of nitrogen, which is a very important fertilizer, is natural gas. It in lockstep results in higher nitrogen prices. Farmers then have to decide how much of utilization of these fertilizers they want to do, and that in the long term does impact yields for agricultural commodities that tend to have a more intense use of fertilizers.
Anika, it's clear you've accumulated a lot of knowledge in the world of agricultural commodities. So, for those in the audience who want to explore the topic a little bit more, what are the most credible organizations for obtaining news and research on this sector? Which ones do you tend to follow for forming your own views?
So we tend to follow the United States Department of Agriculture. They tend to have very, very interesting reports that come out on a more timely schedule. So you have the monthly WASDE reports. You also have the acreage reports that come out twice a year. You also have the updates on the crop outlooks, which we track, which also gives us an indication of how the weather is progressing. In addition to that, for individual soft commodities, in the case of cocoa, we look at the International Cocoa Organization. For coffee, as Brazil is, the chief producer of Arabica coffee, we tend to look at the reports coming in from Unica. That's been quite helpful, in terms of gauging in the on and off cycle years, how the crop outlook has been varying, what are the expectations going forward. So I would say some of these reports have been key to our research that we've been producing.
So, if we then look ahead in terms of your outlook for the sector, just keen to get your thoughts for where the sector is headed for both the rest of this year, so near term outlook, but also your long term view on the sector as well. What are your thoughts there?
So over the near term, I think we have two very important tailwinds. The first being we're on the cusp of an El Nino weather phenomenon, and that's likely to have, the impact is likely to be to be warmer temperatures across the globe. And what we've seen from past El Nino cycles is that typically tends to have an important impact on grains as well as soybean oil, and cocoa. Those particular commodities, amongst the commodities that we track, they tend to have a more price positive environment. I think so that is likely to play on these particular commodities in the near term. I think the second important tailwind that's likely to it's an unfortunate tailwind is the ongoing Russia-Ukraine war. We've noticed ever since the Wagner attack on the Russian government, Putin has just upped the offensive on Ukraine, and that, as we rightly predicted, also um, uh, you know uh, did not continue with extension of the Russia-Ukraine Black Sea Grain Initiative, and I think that remains a very important tailwind for the grains complex in particular. Until we see tensions resolved in that space, it's likely to put a lot of upward pressure on prices. Over the long term, I believe the environment is continues to be quite price positive, and the reason for that is the population is only expanding. Demand continues to be quite inelastic for agricultural commodities, and that is likely to favor demand going forward and make it a more price positive environment. Now, clearly, there will be nuances one year to the next, depending on which current cycle we are in, whether it's an Enso cycle or a La Nina cycle. Um, but what we are seeing take place amongst governments, and we saw this at the peak of the COVID pandemic, is the case of rising protectionism. So we've seen that from a number of countries. We saw that in Russia during the Russia-Ukraine war, where they restricted supply of certain agricultural commodities. We've seen that this year, where India just imposed export restrictions on non-basmati rice. Now, clearly, there's already speculation that there are a number of other countries that are likely to join hands as these concerns of El Nino continue to grow. So we believe, given the rise of protectionism, the ongoing increase in oil prices, which will lead to competition for, more production of lesser production of agricultural commodities in lieu of more production of these biofuels, to have a cleaner, to also fuel more cleaner air. I believe we're likely to see a tighter supply situation, which is likely to be more price positive for agricultural commodities.
Excellent. Well, thank you very much, Anika, for such an engaging and insightful conversation. And thanks everyone for tuning in. We hope you all enjoyed this episode of the Commodity Exchange. If you want to hear more from us, please do subscribe on whichever platform you're using. And please take a moment to leave us a rating. You can follow us on Twitter at Aneeka Gupta WT and at Mobeen Tahir WT. And if you want to learn more about commodities, visit WisdomTree's website, where we have a wide range of research materials and insights. See you next time.